Good morning, all that is here. I'm going to start now, just like I stated promptly. Remember, I said this is being recorded, so everybody knows that the lesson is being recorded. For those who miss or you want to review it. So we're starting. Last week we had done where we knew what we have to put into the income statement, which was the expense incurred and the revenue earned. And in order to get to that, if they did not give you that information already, if they didn't state it, but they told you there was an accrual or there was a prepayment for the expense or the revenue, what you would have to do is to add the accrual to the amount paid or received and less the prepayment for the amount paid or received. You should have learned, so we just this little reminder that in the trial balance that we do in Form 5, 4 and 5, because we do a different trial balance in Form 6. That's an adjusted one where they will give you the prepayment and accrual then for those who do that in Form 6. But for those that are not going to do it in Form 6, in Form 5, the trial balance that they give us, it is the expense paid and the revenue received. That is in the trial balance. And then in the notes at the bottom, that is when they would show us if there's an accrual or there's a prepayment. So that is what we did last week. But there are two final accounts. So last week we did the income statement and the fact that you had to add the accrual and less the prepayments to get the amount incurred and earned for the income statement. This lesson we're going to do the balance sheet, which is the second final account. So let's see. Okay. So the reminder is always that we're using the accruals concept, which states that is the expense incurred and the revenue earned that has to be recorded in the final accounts when calculating profit. That is why we have adjustments like accruals and prepayments that we have to show in our final accounts. So the revision, you should know by now what the 4 types of accruals and prepayments are. And they are the accrued expense, accrued revenue, prepaid expense, prepaid revenue. So that is the 4 types. You can't get any more than that for the accruals and prepayments, just those 4 types. What you're going to learn is that they also, of course, every single account belongs to a category. And what are the 5 categories? Alice. So we're bringing up Alice again. Assets, liabilities, income, capital, expense. And for the balance sheet, if you would remember, the 3 that goes into the balance sheet will be assets, liabilities, and capital. So the balance sheet, these 4 types will have to fall into either asset, liability, capital, no. So what you will need to know for the 4 types of accruals and prepayments would be, we shortening her name for this to Al. So we calling her Al. The only 2 categories that these 4 types can fall into is either an asset or a liability. I'm giving you a hint right now. 2 are assets, 2 are liabilities. Right? So that is what we're going to learn to identify. So in Alice, and it is only Al for this one, accruals and prepayments are either, more specifically, current assets or current liabilities. So they're not going to be anything else. You just have to identify them. This is in your workbook, and this is what you're going to have to learn off. So we put it in a kind of a table form for you. The expenses under your current assets, you have prepaid expenses, accrued revenues. And for current liabilities, you have accrued expenses, prepaid revenues. What I would emphasize a lot more further on when we have gone through some examples or whatever is that once you learn one or once you memorize one, you will be able to place the others, because from this table you would see current assets. Let's just looking at the current assets alone. Prepaid expenses. If you memorize that a prepaid expense is a current asset, then you will know the other current asset is the complete opposite of prepaid expense. So if you look at it, accrued is opposite of prepaid, revenue is opposite of expense. So all you would have to learn, or memorize I should say, is the prepaid expense, which tends to be, expenses are the most popular. So we'll learn off the expenses, and then you would know that the revenue is the opposite in terms of the balance sheet, right? So you remember that prepaid expenses are current assets, which we're going to explain why in the lesson. But once you remember this, the other current asset would be the accrued revenue, which is the complete opposite. And then when you go on this side, accrued expenses would be the liability, and the other current liability would be the complete opposite, which is prepaid is the opposite of accrued, and revenue is the opposite of expenses. So we're going to just reinforce that in this lesson. We're going to deal with the expenses first. So the adjusting entries for expenses in the balance sheet, as we saw before, the expenses, a prepaid expense is a current asset, and an accrued expense is a current liability. So for the expenses, remember we said this one, we memorize this one, current asset, and the opposite expense would be the current liability. And we're going to explain how. I think most of you have, I believe, prepaid phones. So in our example, because I think that you would be able to apply it more, we're going to use the prepaid, and for those who may have a postpaid phone to explain the expense, the prepaid expense and the accrued expenses. So if you have a prepaid phone, you buy a card, right? These were how they used to do it before. But yeah, basically, you go and you buy or you pay for the top of whether it's $50 or $20 or $100 or whatever it is. That means that whatever you pay for, in our example, we have it as the $50. That means that you now have $50 worth of calls. But you put your money already, you paid your money already. You paid your money for a certain amount of service. But have you received that service as yet? Or have you incurred that service as yet? So that is why it will be called a prepaid, because you put money or you pay money first before you actually incur your expense. So if it is that you have paid for a service that you have not received, you have paid for a service. That means you have an asset. You have service to receive. So that is why the prepaid expense would be considered an asset. You put out money for a service you have not received as yet. You have to receive that worth of service. So until you receive it, that is your asset. Then we have the postpaid phone, which is different. The postpaid is that you pay after you have incurred. So you make all of your calls, and then depending on your usage of the phone, so in this case it's $500 worth of calls, you will now have to pay that amount. If you haven't paid it as yet, because you have now incurred that $500 expense, but you have not paid for it as yet. So you are owing that amount of money. It's accrued. So therefore, your postpaid phone is an example of an accrued expense. You incur before you pay. And since you owe money, that means it's a current liability. So I hope that explains in terms of that. Prepaid expense, like for the example, if you have a prepaid phone and you pay money for the card, that is considered an asset, a current asset to be more specific, because you are now owed a service. You have a service that you have paid for, you haven't received, it's an asset to you. The postpaid phone, you use the phone and you incur the expense first, and then you would owe money. So you would have to pay money on it. So that will be an example of a accrued expense or liability, because you owe that money now because you have incurred the expense. So this one is now where we go into the revenue. So you would see for the revenue, one is an asset and one is a liability, just like with the expenses. So you have accrued revenue would be the current asset, and this is revenue owing, and prepaid revenue would be the current liability. And the example that I use for this one would be a teacher who receives money like a salary at the end of the month, that's like me, and a lessons teacher that specifically receives money at the beginning of the month. And one is the asset, which would be the one who receives the money at the end of the month, and the liability is the one who receives the money at the beginning of the month. So we're going for the asset first, and you'll see that the accrued revenue is actually the asset in this case. So teachers receive our monthly income at the end of the month for the teaching service provided during the month. In other words, we earn our income before we receive the money. So all now, this is the end of the month. Oh yeah, today is the end of the month, or today is the first of the month, right? So hey,
first of the month.
Yeah. So before, so my lesson last week would be where I would have been earning for the month, and I had not received the money as yet. But yesterday I should have received the money for all of the service, all of the teaching that I did during the month of, we in what, July now, right? During the month of June. Now, today's lesson, this is the first of the month, I am now starting to earn my money, which I would receive at the end of July. So right now, as I am teaching to you, this is an asset to me, because even though I have not received the money, or I'm not going to receive it until the end of the month, this lesson that I am giving you here, I am actually earning my revenue. I'm earning my pay, which means that I am getting an asset, right? So when we teach, we earn revenue. That revenue earned is now owed to us, and that's what accrual means, right? It's owed to us. Since we are earning it, it is being accrued as we go on, because we're not going to get it until the end of the month. So it is now owed to us, which is accrued, and is therefore an asset to the person that is earning it. So right now, I'm earning money, current asset. It's owed to me. So if I were to demand pay now, I would get a day's work. I'm just rounding it off, right? Because I know you're already working it out that I have not earned anything for a day as yet. Cool, but I hope you get the idea. See me running down the thing there. Accrued revenue is a current asset. That is the basic point of it. Accrued revenue or revenue owing is a current asset because it's owed to the person. They have earned it already. Now we're going to go on to the prepaid revenue, which is also known as unearned revenue, and that is a current liability. So we're going to put a different person. He represents a lessons teacher, but specifically he's a lessons teacher that receives their fees at the beginning of the month. So some lessons teachers would earn their money like a teacher for the month, and then you pay them at the end of the month. But then there are other lessons teachers that will ask for the payment before or in advance. So like today is the 1st of July. if you're doing lessons, you would go and you would pay them in advance for the month, whatever the fee is, like $300 or $400 or whatever the fee is, you would pay them that amount at the 1st of July. So they earn their money after, because you say you were to pay me now, this was lessons, $300. Have I earned anything yet? I've earned, like, what time it is? About 15 minutes worth. That is not the whole month, but you paid me for the entire month. So lessons teachers that get paid at the beginning, they earn their income after they receive the money. So in other words, they receive the money before they even earn that money. And then they will just earn it as they give you the lesson. That means that they have not earned the revenue received, so they owe teaching services. They have to earn that revenue. So it's so wonderful that today is the 1st of July. If you paid me today, I owe you a service. I have not earned that money yet. So for me, that money that I received from you is a current liability. I owe you something. That makes sense to everybody. So because I have not earned it as yet, you gave me money, I received money in advance, that is a liability or amount owing. So prepaid or unearned revenue is therefore a current liability. Now you'll notice that I had my poor lessons teacher. He was wearing green before. I put him in red to represent. It is not him, the lessons teacher, that is a liability, yeah? People. The only reason I put in red is because he is receiving the money before he earns it. So he represents the unearned revenue, the current liability. So it's not the lessons. Don't go and tell all your lessons teachers I say that they are liabilities. Because if the lessons teacher were to receive their money at the end of the month, that revenue for them would actually be an asset, because they will fall under the other one, just like us teachers. You'll understand that, right? So just assume that I'm a lessons teacher at this point in time. If I receive my money at the end of the month, that means I have earned my money already. So that would mean that that is a current asset. So it would be the same for the lessons teacher. So just to make it clear, whether it's a current asset or a current liability will be when you receive the money as opposed to when you earn it. If you receive the money before you earn it, that means it's unearned, and that would be a current liability. Right? So they earn their income after they receive the money. So that would be for them, if they were to do their books, unearned, and that would mean that they owing a service, current liability. So accruals and prepayments, once again, they form into either assets or liabilities. And we have the two assets. So we're putting it like this now. The two assets would be prepaid expenses and accrued revenue. And as I said before, they are opposites of each other. So you could just memorize one. But the prepaid expenses are current assets because the business is owed a service for money paid in advance. So you already paid your money for the service. It's an asset to you. You just have not received or incurred that as yet. For the revenue, accrued revenue, the business is owed money earned. So you're earning your money, like I am earning my money right now, but it has not been received as yet. Good. It has not been received as yet, which means I still have earned it. So it is a current asset to me, right? And to my business. And then the liabilities would be the accrued expenses and the prepaid revenue. Accrued expenses, very easy to understand. you're owing that. You've incurred it already and you're owing it. You have not paid it as yet. They owe money. What is a liability? When you owe something, you owe money. Liability. And in this case, you have incurred your expenses. You owe that money now because you have not paid it as yet. And your prepaid revenue would be unearned revenue, which is a liability. It means that the business owes services as it has not earned that money received. They received that money already, but they have not earned it. And how do they earn it? They have to provide the service, so they owe you that service, right? So that will be a current liability in that case. Right, so here is the summary of it in the little puzzle. I want you guys to try to memorize it now, because I'm going to kind of try the little testing thing for you, but you're memorizing this now. Current assets, as I suggested before, just to memorize the prepaid expense. And then the other current asset is the complete opposite. Complete, as in accrued revenue. Accrued is the opposite of prepaid, and revenue is the opposite of expense. So in other words, for current assets in your balance sheet, you cannot have two adjusting entries for expenses, or you cannot have two adjusting entries for revenue, or you cannot have two prepaids or two accrueds. It must be the opposite. So if your current asset is prepaid expense, the other one cannot be prepaid revenue. You all getting it? Cannot have two prepaids. It's the opposite. So prepaid expense, the other one would be the accrued. And since you can't have two expenses, it would be accrued revenue. You just have to memorize one and you're able to figure out the others. So you don't have to go the process. The process that I had just done, where you have to figure it out and I explained what it means and all that sort of thing. In an exam, you don't have time to keep on doing that. So we just explain it for you to understand why. And then for you, you will just now memorize what you have been explained. And we give you an easy way to memorize it. Memorize one, and then the other one is the opposite of it. So under current assets, you would have a prepaid expense and an accrued revenue. When you go now to the current liabilities, a prepaid expense can't be a current asset and a current liability. So that means that if you're looking at just expenses, if the prepaid expense is a current asset, then obviously the accrued expense will be the other one, which is a current liability. But when you're just looking at your current liabilities, accrued expenses, that is expenses that have been incurred, but you are owing because you have not paid it as yet. So you're owing money. And therefore, that would mean that accrued expense, current liability, and you cannot have two accrueds and two expenses. So the other one will have to be the prepaid revenue. You'll see how easy it kind of is. Well, we will see how easy it is. So you'll have one more look in terms of memorizing. 5, 4, 3, 2, 1. Right, so we're going to go into the activity, and what this activity would be is you're going to have to identify specifically things like whether it's a current asset or a current liability. Cool, and to do that, of course, you would have to identify whether it's a prepaid expense, accrued revenue, or prepaid revenue, right? It's only those 4 things it can be. And then, 2 of them are supposed to be assets and 2 are supposed to be liabilities. So that's what you're going to have to identify. So let's start with the first one, accruals and prepayments. Alice, I should change that to Al. What category is prepaid expense? Anybody gonna help me out with this, or we just gonna not have any fun with you all answering?
A, current asset.
Thanks.
Current asset.
I have more than one person and I wish I could see who it is. All right, you're saying prepaid expense, current assets. Very good. Started easy. What category is accrued revenue? This one should be speed testing.
Current asset.
Current asset.
Good, excellent. Right. What category is accrued expense? Let me see you going fastest.
Current liability.
Right, that's Eden.
Yeah, current liability.
That's Jonathan. Okay, what category is unearned or prepaid revenue?
Current liability.
Wait, there was more than 2 people there, right? But you all basically got that all together. Right, sweet. Good, so now we're going into the specifics where you're going to actually have to identify if it's an expense or if it's a revenue to be able to determine. So what category is prepaid insurance?
A current asset.
Jonathan? Sebastian, so everybody agrees? So it's a prepaid expense, and a prepaid expense is a current asset. Very good. What category is accrued salaries?
Current liability. Yeah, current liability.
Current liability.
Current assets.
Everybody said B except for one person who said current asset. Salaries is always an expense from the business point of view because businesses don't receive salaries, they receive profits or income, which it translates into profits. So salaries are always something paid to employees. So salaries will always be an expense, and an accrued expense means that we owe money. So that will be the current liability. So good. What category is accrued rent revenue?
Current asset. Yeah, I've seen current asset too.
Current
So
asset.
was that I'm just testing myself because I need to also test myself, right? Was that Brown, Ali, and Aiden in that order?
Yeah.
Haha,
Yes,
yes.
miss.
Okay, great. So in terms of the answer, you guys are all correct. In terms of speed, Emmanuel got you all this time. So what category is unearned rent?
Current liability.
Current liability.
Current liability. Everybody says current liability. Or the first person was Aiden, right?
That's right.
Right, so you guys were all correct in this case in terms of if you're doing any speeding. Aiden got it this time. Okay, so I think you guys understand more. You just identify whether it's revenue expense. If it's a prepaid expense, it will be current asset. If it's an accrued expense, it will be current liabilities. Those are the 2 most popular ones because expenses are the popular ones, as we always seeing for income statement and stuff. Memorize one, which is the prepaid expense, or the accrued expense, or both of them. Just as long as you know the expenses, you will automatically just know the revenue as well. And also, if they call unearned revenue, that kind of gives it away too. If they say unearned, you tend to know one time that's a liability. right? But if they say prepaid revenue, just think about it as the opposite of the accrued expenses. So it also falls under the current liabilities. But this is what you have to just memorize for your balance sheet. You see it again, and there, and there. And you just memorize this. I think you guys got it. So I don't know if you remember from last week when we had done the this was our example for the income statement, and just a reminder, the trial balance shows the expenses and the revenue that is paid. So the expenses, which would be on the debit, this is how much repairs was paid, and this is how much utilities was paid. And in terms of revenues, which would be in the credit column, because of Alice, you remember, debit, credit, 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 debit. Credit column for income or revenue. This shows you the amount received and the amount received. So what we did last week was that we emphasized that this additional information, besides this being the amount paid and this amount received, this tells you whether there's an adjusting entry in terms of an accrual or a prepayment. Like paid in advance always means it's a prepayment. Accrued is another word for owing. So owing, outstanding, when you see those words, that's an accrual, and you just add the accruals less the prepayments. So that is what you do for the income statement. But for the balance sheet, your notes tell you what the adjustments are in terms of whether it's the 4 types, the accrued expense, accrued revenue, prepaid expense, prepaid revenue. This is the notes that tells you which accrual or prepayment it is. And this information, so in your notes, this is the information that you're looking for your balance sheet. So you're not going to need to look at your trial balance in this case, unless they give you some kind of information that you have to work out your accrual or prepayment. But our example is very, very, very straightforward. So for the income statement, we had to look at this information, the trial balance, and we had to look at the additional information. Since we are doing the balance sheet alone right now, the only information you're going to have to look at would be the notes, which state what adjustments need to be made at the year end in terms of the accruals and prepayments. And it's the accruals or prepayments, as we just saw, that goes into the balance sheet, either under your current assets or your current liabilities. So we're going to do an example. This is the same example. We just took the notes there, and this is what you would have had memorized by the time you're going into the exams. So we're going to do each one now, and what you're going to be telling me is what is this adjustment and which one does it go under. You're going to say whether it's a prepaid expense, accrued expense, prepaid revenue, accrued revenue, and therefore which one does it go under in the balance sheet, current asset or current liability. First one is a prepaid expense. We don't put the word expense in the balance sheet. We actually put whatever the expense is. So instead of putting under current assets prepaid expense, or what some of you might want to do is you just find all your prepaid expenses and add it up. You can't do that. You have to tell them exactly what expense it is. So that is what you're going to start learning to do. In addition to, you're not going to just be prepaid expense. You're going to put prepaid repairs. And if there's another prepaid expense, for example, prepaid insurance, that means you would have both of them separately. You never just add up the total thing and put prepaid expense and a total amount, because everything in accounts, what you guys are supposed to be doing as accountants is you're supposed to be giving the users as much information as possible, and you want detailed information. Because, like for your report card, you don't just want an average. You don't want your overall mark, because that does not give you all the information that is necessary, does it? You need to get each subject so that you can have proper feedback, know where is your trouble areas, where is your weaknesses, where are your strengths. So never put a total. You have to be very specific. And in this case, repairs paid in advance. Repairs would be an expense. Paid in advance would be a prepayment. So therefore, you have a prepaid expense, and specifically, we would say prepaid repairs, and your prepaid repairs would be $50 under current assets. For number 2, it's utilities, which is an expense. It's accrued of $75. So that would mean an accrued expense, and more specifically, you will call it accrued utilities. So because it's accrued expense, which is accrued utilities expense, that is a current liability of $75. Anybody wants to try number 3 for me?
Miss, I say number 3 is a prepaid revenue.
Okay, great. So prepaid revenue. So you would have it as prepaid rent received of $200. And which one would that go under in terms of current assets and current liabilities?
Current liabilities.
So prepaid revenue, excellent. Thank you. Prepaid rent received, which is a prepaid or unearned revenue, would go under current liability. Interest revenue owing. Interest revenue is also revenue. Owing means it's accrued. So you have accrued revenue, and accrued revenue is a current asset. So that will go under current assets. So this is what your balance sheet would look like based on this information. So we have under your current assets, we had a prepaid expense and we had an accrued revenue. And you see that the notes gave us the exact amounts. So what is the prepayment? In this case, it was $50. So it will be, this is the $50. And it goes in the second column, just like the inventory and the accounts receivable and the cash and bank. This will go there. But for now, it's just these two. So it's prepaid repairs. You have to be specific. You don't have to put the expense in terms of space, but you have to put prepaid repairs. So I'm going to emphasize again, you cannot put prepaid expense or accrued revenue and just put the amount. You're not going to get it correct. You have to put the specific name of whatever the expense is. And in this case, the expense was the repairs. So this is what I'm going to have to see, prepaid repairs. You don't necessarily have to put the expense. If you want to, you can put it. But you must put the prepaid repairs. Another thing I have to emphasize, because I've seen people do it, and you're not going to get it correct. Just have repairs. Can anybody unmute? I'll give like 5 seconds if you want to try. Why would repairs $50 be incorrect there, and you wouldn't get any marks at all for it, even if it's under the current assets?
Because the expenses is on the balance sheet.
Excellent. Very good. You're not even going to get half a mark if you put repairs, because some of you might think, oh gosh, we just left out the prepaid, so we should at least get a half a mark. You're getting it totally wrong because of what Jonathan just said. Repairs, expense, revenue, they don't go into the balance sheet. They're not supposed to be in the balance sheet at all. And if you just have repairs, no prepaid, that means that this is an expense. Without the prepaid, expense is just expense, which goes into the income statement. So you need prepaid and you need accrued added to your expense and revenue for it to go into your balance sheet. Have to emphasize that for you. It's the prepayment or the accrual that makes it a current asset or a current liabilities. Without those adjustments, they are just expenses and revenue, which only belongs in the income statement and has no place in the balance sheet. Emphasizing that so nobody could argue with me if you get 0 marks if I see repairs and interest revenue under current assets. You could argue all you want that it's the correct place under current assets, but they are not current assets unless they have the prepaid and the accrued. Same thing for the current liabilities. You must have the accrued and prepaid, and in this case you have the accrued utilities, which is an accrued expense. You're owing money, and how much it is? $75. Sorry. And for current liabilities, you have the prepaid rent revenue, $200, prepaid revenue or unearned rent revenue. That is a current liability because you have not earned it as yet, right? So $200. And this is what your balance sheet without the other things. So a balance sheet extract. This is what it would look like. And that is the activity that you have to do now. We'll just go, because of time, I'll just go into the answer. But these are basically the answers for each one. You have service revenue earned, so which means it's revenue. And the amount earned and the amount received, it means that the amount earned is more than the amount received. So looking at it this way, we received less than the amount earned, and whenever you receive less, that means that there's money owing to you because you earned this amount and you only received the 30,000. So that would mean an accrued revenue. And what is the difference? The difference is 12,590, and an accrued revenue is a current asset. So rent paid for 18 months, 27,000. For this one, you remember that your balance sheet is done for a year. Then you would have had to find out for 12 months. If it is that you're supposed to pay for 12 months, but you paid for 18, that means that you paid some in advance. So I hope you guys picked up on that one. How you would have found out the prepaid amount, there were 2 ways, a long way and a short way, which is that you would find out for the 12 months. And how do you find out for the 12 months is always the amount divided by the amount it was paid for. So the period it was paid for. So it's 27,000 divided by 18, because this is the amount of months that it was paid for, the period it was paid for, and multiply by the period you want to find out the amount for. So if you want to find out the amount for a year, you would multiply that by 12. And then the answer that you get, then you would minus the 27,000 to get the prepaid amount. That's the long way. The short way, how many months was it prepaid for? Right? If you're supposed to pay for 12 months and you paid for 18 months, that means 18 minus 12 would be 6. I hope I'm correct with my math. So that means that you prepaid for 6 months, and you can find out, therefore, what is the amount for 6 months. So you would do the same thing. It's the 27,000 divided by the amount of months it was paid for, which is 18, and multiply by 6, and your answer, 9,000. I hope everybody understands. Let's go on to the easier one. Construction completed by the year end, 43,000. Fees received. So you see the received, which means it's revenue. And how much did you receive? 60,000. How much did you earn by completion? You earned 43,000, which means you received more than you earned. And whenever you receive more, that is a prepayment. Prepaid revenue. What is prepaid revenue? It's a current liability. How much was unearned or prepaid? 60,000 minus the 43,000. So interest on loan outstanding, whenever you see the word outstanding, that means it's an accrued. Interest on loan is an expense. So it would be an accrued expense. What is an accrued expense? It's a liability. So your answer here should be current liability. They told you how much it was, the accrued amount, 270. So this one was nice and easy. Accrued expense, 270, current liability. Salaries, always an expense, owing, accrual, and therefore we have an accrued expense. They told you how much it was, 2,300, an accrued expense, money owing, current liability. Insurance paid in advance, $600. Paid in advance is a prepayment. Insurance is an expense. Prepaid expense, 600. Prepaid expense is a current asset. So that means when you go down here, all you had to do when you have the correct answers is to now place it in the balance sheet. For example, here, your current assets, accrued revenue, which is a current asset. So you have to put the accrued revenue. You're not going to come and put accrued revenue. You have to be specific what the revenue is. So you have service revenue. So accrued service revenue, and you would put the amount, which is the 12,590. Your next current asset, prepaid expense. Once again, you're not going to go here and put prepaid expense. You're going to put the specific name of the expense, which is rent, and you're going to put prepaid rent, and what is the amount? 9,000. Next one, we had another prepaid expense, and this is where I want to emphasize what I have been saying. You have two prepaid expenses. Some people might want to take the shortcut and put prepaid expense, add the 9,000 to the 600, and you have prepaid expense, 9,600. Guess how much marks you're going to get for that? 0. Nada. Yeah, none. Okay, so you're not going to ever combine the two figures. They want to see the exact prepayment. Which are the expenses that have prepayments? You have prepaid rent, 9,000, and prepaid insurance, 600. So these are your three current assets, and you would add it up. If you didn't add it up, that's okay. We just want you to have the correct ones because this is an extract. And then you had three current liabilities. Prepaid revenue or unearned revenue. You go down here, but once again, you put the specific revenue. So you're going to put prepaid, for example, construction fees. And the amount is 17,000. You had the next one, which would be accrued expense. You're not going to put accrued expense. You're going to put the exact expense, accrued interest on loan, and the amount was 270. You had another accrued expense. Once again, you do not ever combine them. So you would have separately accrued salaries, 2,300. Reason why we put it in this column is, you remember when we would do the balance sheet, if you had any working to do, we put it in that column so that we only have one figure to work with in this column. This minus this gives you, I hope you remember what it is, working capital. Yay, very good. So this would be your answer, and I will upload a video that can give you better information in terms of this for those who may not be clear. But this is the answer that I'm hoping that you would upload and get your full marks. And that is basically it, because we've kind of run out of time. This was just supposed to be in terms of a summary. All right, so bye guys, and enjoy your vacation. Okay.
Same to you, miss.
Thank you.